Hey everybody, Jay here. Welcome to the channel. This is going to be a bit of a different type of channel on YouTube when it comes to investing, finances, stock picking, etc. There are a lot of great channels on YouTube that have frankly made me a better investor and a more intelligent investor for having gotten plugged into this community. The majority of the channels are either focused on recommending stocks or digging deep on a particular type of investing. A lot of great dividend investing channels, a lot of great growth investing channels, value investing channels, etc. This channel is not going to be about a specific type of investing. Rather, it's going to be about a specific point in time in my financial journey. You saw in the disclaimer up front, I'm in the midst of a mid-career sabbatical. And I can tell you that this taste of freedom has been amazing. It's allowed me to pursue a couple of passion projects that I've always wanted to work on, a couple of real, 0 to 1 type of ideas that I have. For any of those of you who have read Peter Thiel's book, 0 to 1, I've had these ideas that I've always wanted to work on. So I made the decision to leave my job after 18 years in corporate America last spring to pursue my passion projects and just take a look at some other stuff. And it's been very eye-opening for me, and I want to share some of those insights with you guys along on this channel. But for starters, and what I think the foundation of this channel is going to be, is it's going to be taking a look at how I'm managing my finances given this life situation. Because probably the most eye-opening thing, in addition to the stuff that I've learned around pursuing my passion projects, has been how to manage my finances in order to obtain financial independence, in order to obtain financial freedom. So that way I don't have to work unless I want to. I'm not there yet. I'm working on getting there. And that's part of what I'm going to share with you guys on this channel. So the first thing we should talk about as we jump in is, what are my goals? And my goals are really simple. I need to get to $150,000 of passive income per year in order to support the lifestyle that my wife and I are currently enjoying. And then the second thing is timing. My timing's ASAP. Now, if I could do this tomorrow, I would do it. I unfortunately don't have the money or the limited burn rate to do that tomorrow. I do have a nice nest egg built up. You saw in the previous channel, I had about a little under $1 million. That's the majority of my net worth. I have some other assets as well too, which I'll probably share with you guys at some point. But my wife and I, we live in a pretty high cost of living city. And we do have a burn rate that just generating the passive income off of this nest egg that I built is not going to be enough to support us. So what that means is that I'm either going to have to go back to work at some point, or hopefully one of these passion projects catches on. But that's kind of a long shot at this point. So I'm probably going to have to do the former and probably jump back into corporate America, at least for some point. So that being said, those are the channels. Let's jump real quickly into my portfolio. I had this up on the screen before. As you guys can see, I have about $976,000 in my portfolio. I'll do a video shortly after this getting deep into my specific holdings because I want to share those with you guys. But just kind of like at a high level right now, this is on Personal Capital. And I love Personal Capital. It's an outstanding site in terms of helping you really take a look at all of your finances holistically. And it's something that I look at every single morning. So just kind of taking a look at my portfolio, the big thing that jumps out is I have about $100,000 in cash right now. That's because that's the money that we are living off of, in addition to the money that my wife is bringing in with her job. But part of the deal was, when I took the sabbatical, was that we were going to use some of the money that I had saved up to live off of versus just living off of everything that she earned. So as you can see, I still have about $100,000 in cash. We're dipping into that essentially every month to support our lifestyle. So as you'll see with this channel as we move on, that's going to, reduce month by month. That being said, I have had a couple freelance projects that I'm going to be getting paid for soon as well. So we'll get another infusion of cash. And so I'm going to let you guys into how I'm managing all this and thinking about all of this as well too, because I do need to continue working. I need to continue generating revenue, and I need to continue to building up that passive income portfolio. So with that being said, let's just kind of take a look at how my portfolio is segmented. So this, from a sector standpoint, is how my holdings are currently allocated. And this is reflective of my journey as an investor. So what I can tell you is I really wasn't very thoughtful about how I invested probably until about 2014, 2015, which is about 5 years ago. Up until that point, I had just worked in corporate America. I had put money into my 401k, into mutual funds. I really didn't look at what type of mutual funds I was putting them into. I honestly don't even remember the criteria I used to select them. And I just kind of let the money grow there. And then probably around 2015, I'll never forget it, I read a book by Scott Galloway. I'm sure many of you have heard of Scott Galloway, called The Four. And that kind of really opened my eyes, because he talked about the power of these big tech companies, the Amazons, the Facebooks, the Googles, and Apple, etc. And that kind of really dovetailed with another thing that I was seeing as a marketer. And as a marketer, I started working in marketing in the very, very early 2000s, like literally the year 2000. And during that first decade, 2000 to 2010, the majority of the money that we spent in media went to television, and some went to print and to auto home, etc. But by the mid 2010s, as a marketer, I was getting firsthand, a firsthand view of how much money we as marketers were spending specifically on Facebook and Google. And I think having that intrinsic knowledge combined with reading that book by Scott, that really opened up my eyes to the fact that Facebook, Google, these might be amazing stocks to invest in. Because it's funny, I always remember, you get so many great investing quotes from Warren Buffett. And one of the main quotes that always sticks with me is invest in what you know, invest in businesses you know. And Facebook and Google, those were businesses that I felt like I knew. So I started investing into those with any free cash that I had. And then it was funny, when we started getting bonus, or when I was getting my bonuses, I would look, a lot of my coworkers, they would go out, they would buy cars, they would put down payment on homes, etc. When I would get my bonuses, I would buy FANG stocks. Because obviously Facebook and Google I knew fairly well. And just by researching Facebook and Google, they were naturally affiliated to Amazon, Netflix, etc. And so I learned about those very quickly as well too. So I would say, then the other thing that I learned about as well too was index investing, and that was just really the benefit of zero to very low to zero fees on your mutual funds. Because one thing I'd realized too, that the money that I was putting into my 401k, into these mutual funds, some of them had fairly high expense ratios, 1%, over 1%, etc. And so I essentially reworked my portfolio to be heavy tech stocks on one side and heavy index funds on the other. And that was really the basis of my portfolio until I took this sabbatical. And then when I took this sabbatical, one of the main things that started opening my eyes was I started reading a lot about the potential index fund bubble, which hasn't hit yet. But what those headlines do and what that story did is it really opened my eyes to look into other types of investing beyond index funds. And what I ultimately found was dividend investing, value investing, etc. So you can probably tell by my allocation mix, I sold pretty much entirely out of index funds. I still have a couple of them, but what I really focused on in 2019, you can kind of see by the sectors here, was adding income funds, dividend stocks to my portfolio as well too. So that's really what has resulted in the balance that you see here. Tech is still my main play, and I'm happy to do that, because while my ultimate goal is income, I still need a heavy dose of growth to get me there over the next few years, and I really think that growth is going to come from tech. But as you can see, I put a number of investments into bonds and real estate, and that was very specifically to counterbalance the inevitable recession that's going to hit. I don't know if it's going to hit in 2020 or 2021, etc. but it's going to come at some point. So I put some money just to kind of make it not so painful when that happens. And then as you can see, between telco, consumer discretionary, consumer staples, healthcare, and financials, I really I started to put some dollars into there as well too. Utilities, industrials, materials, and are all at 1%. And then I don't have anything specifically in energy other than what's allocated there through mutual funds. And that's just simply because I don't know those industries as well as I know these industries. Just the last thing I wanted to touch on before I close this first video was the tools that I use. So I think you guys saw here. I use Personal Capital, and that does a great job because I have holdings at a couple different places. It does a great job of consolidating all my holdings, giving me a real time look at my portfolio. And then another tool that I like to use is tip ranks. You can kind of see tip ranks here. It does, and never mind the discrepancy. There were a couple of mutual funds that I have that don't register in the tip ranks tool, so that's why the number there is a bit lower. But what I really like about tip ranks is the portfolio analysis. It gives me sort of like a condensed overall look at what is my beta, which honestly it was less risky than I thought it would be, given my over 1/3 of my holdings being in tech stocks. But I guess that's what also investing into bonds and REITs, etc., will kind of help balance that out. This dividend rate's a little bit off. I'm gonna do a video for you guys where I dig deep on my dividend rate and my annual income to kind of let you guys know right now. Overall, with all my holdings, my actual passive income right now is a little over $25,000 per year. So, or is projected to be at $25,000 per year. So I'll share that with you guys. And then the other thing that I think that is really interesting on tip ranks is the beta. So here you can kind of see with the beta. Let me move that here. The average beta, or I'm sorry, the average PE. And the average PE for a tip ranks portfolio is 44, which is super expensive. I know at the S&P is in the mid 20s. Mine is at 85.76. So again, as we dig deep into my portfolio, you're gonna see what's driving that. Like, you're already getting a sense right here. I have a lot of holdings in Facebook, Verizon, Microsoft, etc. I can tell you right now, the main stock that's driving that PE being so high is Amazon. That's my largest holding, is Amazon. So again, I'll get a bit deeper into that. But yeah, those are some of the tools. So again, thanks for watching the video. I hope you guys enjoy this. I'll start publishing regularly. I know we're going to have very few, if any, followers at the beginning, but I'm going to continue to publish content, put it out there, and share this journey with you guys. And if you find it valuable, feel free to subscribe, and have a great day. Thank you.